welcome back to another video, guys. In today's video, this video is all about identifying trend reversal. So when do we know the trend is about to end? And I've made this video too because a lot of people were asking that we struggle to identify when the trend is reversing, and so basically this video hopefully will help you identify the trend reversal. I'm going to break it down in as simple and as informative as possible for you guys, and the way I look at it, and then the way when the trend's reversing, we don't want to be going against the trend, guys. We want to follow the trend. Again, remember my saying, trend is a friend until it ends, and when the trend ends we need to know exactly what we're doing and how we're going about things. So let's get started. First thing first, guys, please read the disclaimer below. Once you guys have read the disclaimer, please continue with the video. Okay, so I'm hoping that you guys have read the disclaimer, so let's get started. The first thing we need to know about trends is, guys, that there's three types of trends, and then we need to know exactly what type of trend the market is in and when the trend has ended, because when the trend has ended, guys, we don't want to be part of that trend. We don't want to be going against the trend, because going against the trend will make you lose money, and it will affect your psychology as well when you lose trading as well. So you just want to follow the simple rule, guys. We want to follow the trend, we're not going against the trend. So the first trend, guys, is an uptrend. Is a series of high highs and high lows. It's like, can you imagine? So if you guys have played snakes and ladders, for instance, like a game, so it's like the snake is going up, so it goes in parts. So it goes up, then it goes up like this, then it takes a break, then it goes up like that, then it takes a break, then it goes up like that, and it takes a break, then it goes up like that. So that's an uptrend, guys. So the downtrend is the opposite of uptrend, so we're going down, guys. So it's defined by lower highs and lower lows. So what the market will typically do is it'll go down, it'll make a lower high, go down, it will make a lower high, go down again, make a lower high, and then go down, guys. So we're going down in the downtrend and we're going up in an uptrend, guys. So this is what we need to remember, what type of trend it is. The sideways trend is like a range. So let's just say, like these here boxes here. So we're just going side, like we're going on the side, but we're not going up by creating higher highs, and we're not going down by creating lower highs, guys. So these are the three types of trends, and it's really important that you understand which each trend is and what the market's doing. So I typically like to look at my trends at 1 hour time frame, because it's worked out the best for me. You can either do it in the 1 hour and the 4 hour, and then that's the main trend, and then you can get the mini trend from the small time frames, like the 30 minutes or the 15 minutes. So we look at these time frames for higher time frames for the trend, and then we look to trade in the same direction on the lower time frames. So let's just say if the uptrend is being formed on GBP USD on the H1 time frame, we know the market's going up, creating whole high highs and high lows. So we'll go on the smaller time frames, like the 30-minute time frame and like the 15-minute time frame, or even the 5-minute time frame if you'd like to trade the 5-minute time frame, to look for buys and the desired areas. And we do that, so we're looking for buys, we're not looking for sells when the market's going up, guys. The same with downtrend. Let's just say if Euro USD is creating lower highs and lower lows, so it's going down like that, we're going to be looking for sells on all time frames, so on entry time frames. So if the H1 is showing that the market's going down, we'll be looking to take the sells on the 5-minute time frame or the 15-minute time frame, depending on which one you trade. And when it's a sideways trend, guys, I don't like to trade sideways trend because it's too much hassle, too many confusions, and typically in a range you will come out in a loss. So I would personally advise you guys to just stay out of the trend when it's range bound and when it's going sideways. We want to be going up or down. We can't trade it when it's going sideways. It will get you stuck and it will hit your stop loss, and you'll probably think like, why did I even enter when there's not a clear trend, guys? So we want to be trading these two trends on the top. Now, trend reversal, guys, a lot of people, they struggle with the reversal and they don't know when the trend's reversing, and they think it's still an uptrend or it's still a downtrend. So we need to understand that when the trend is reversing, we need to get out and we need to avoid our losses. And again, when the trend is reversing, identifying these trend identify these trend reversals could help us to maximize profit and minimize losses. So there's many signs of trend reversal, guys. The first one could be, patterns like the head and shoulders or the double bottoms and double tops. So I've made a video on this as well, so you can go on my YouTube channel to go through my videos, guys. I've made so many important videos that could be really informative, and it could really help your trading a long way, guys. So please watch them as well. So let's just say, if you've created a double bottom or a double top, or a double bottom pattern. So double top typically looks like an M, and double bottom looks like a W. So we need to understand this, and then we could have head and shoulders as well. So I've made on that as well, guys. So you can watch on my YouTube channel. And this break of trend lines, guys, I'll be showing you a break of trend line. So trend line is typically a line that's going up and the price is just bouncing off it a couple of times whilst it's going up. So I'll be showing an example of that as well. So when a trend line has been broken, that means there could be the end of trend. So we don't want to be trading the same trend as it was before the trend line was broken. So it's really important. Moving average crossovers, I've made a video on moving averages as well, and I'll also be showing you an example next of what I mean by this, so you can have a look. But if you want to learn more about moving averages, guys, please go to my YouTube channel, and there's videos there to moving average, and it's a really essential tool, and I would suggest you guys to watch that video as well after this video, so that you guys know exactly what I'm talking about, and it will hopefully help with your trading as well. And then the divergence, I've made a video on divergence as also. If there's oscillators like the RSI or MACD, and there's detailed videos on my YouTube channel for this. So I'll be also showing an example in this video, but for detailed ones, guys, I would suggest you guys to go through my YouTube channel and go through my videos, because they will help you a long way, guys. Okay, if you're enjoying the content I'm providing, please like, comment and subscribe to my YouTube channel for more videos. Thank you. So this is the example that I was talking about. As you can tell, guys, we're going up. We're creating high highs, high lows, high highs, high lows, high highs, high highs, high highs, high highs again, and we carried on creating high highs and high lows and high high again. So as you can tell, we're going up, guys. We've got trend lines indicating we're going up. So this was our recent swing high, what I call it, and then as you can tell, when the trend line was broken, we started to go. This is the reversal, I would say. This is the reversal of trend, and oscillator is also telling us that the market's been overbought. So at that point, we know that we're overbought. The trend line's been broken. This is a swing high. Now we just wait for the swing high to be broken, and then what happens here is, guys, as you can tell, we've started to create lower highs, lower lows, lower highs again, and then here's a bit of shuffling, so we're not really bothered about that. But then here, lower highs, lower lows, lower highs, lower lows, lower highs, lower highs, lower lows, lower highs and lower lows. So we broke our most recent area of structure, so we can call it a swing low. So this was broken, and the market has also presented a moving average crossover, and this is a death cross because we're not bullish anymore. So after seeing all this, guys, I would typically know, and we know that I would typically stay out of buys anymore, because I know the buys are not valid, and then the market after this will carry on going downwards, guys. So again, we broke the trend line, we broke the structure. RSI showed that we're overbought. Once we started to create lower highs, lower lows, and moving average crossover was crossing over downwards. So then this is more than enough for us to know that the market is going down. And then when you see this in your scenario of in your trading as well, guys, please don't look for buys anymore, and the opposite goes for sells. When you see the bottom trend line for, so let's just say sell, we just reverse this whole scenario. And when if a market is going down and the trend line's been broken, the areas of structures are being broken, and we also get a bullish crossover, and we get an area that's broken upwards, then sells are no longer valid as well. So I'll be showing you a live example now after this. But how do we trade reversal, guys? So we trade it, but we wait for the confirmation. We never enter at the first thing, that just because the price has got to that point, we never just enter randomly. We wait for a confirmation. This could be multiple candles, or a confirmation like a bullish engulfing or something like that, guys, or a break of structure, etc. And we set our stop losses to protect our account, guys. Again, we never want to trade without stop lossing, and we never want to trade without risking too much. And again, we want to manage our risk, and we want to make sure that each trade is a single trade, and we risk per trade. We're not risking the whole account one trade. And again, this is really important, guys. So I'll be showing an example before the conclusion. So as you can tell, guys, again, here is another example. So if we're on GBP CAD and we're creating higher highs, high lows, high highs, high lows, high highs, and we just carried on going up, guys. So this was a bullish trend line, and trend line consists of minimum 1 to I like to say about minimum 2 to 3 bounces. So we bounced here, we bounced there, we was going to bounce there as well, but then we broke. So now we know that our trend line's been broken, and this could be a possible reversal of trend. Now this part here, guys, this was our most recent swing low, guys. As you can tell, the market was bouncing off it, and the minute we broke this area of structure, so when we broke this box, the market started going down. So now we need to basically know that once our trend line and the structure is broken, the market will go down, and this is your end of trend, guys. So I've made it as simple as possible, and I've showed you multiple ways that you can do this, and you can also look at things like the RSI and the moving averages as well, but I've shown you an example without them as well, because some people don't trade that with the RSI and some people don't like moving averages. So this is just a naked chart, guys, and you can see the trend line has been broken, the area of structure is being broken, the swing low was being broken, and the market started to make lower highs, lower lows, and it carried on going down, guys. So this is the most simplest and the easiest example I could find for you guys, and then now we get to a conclusion now. So again, recognizing the trend reversal is, again, it's really important. It's a combination of technical analysis and price patterns, and then we need to make sure that we follow it correctly. Again, all trading strategies, there's no foolproof or bulletproof strategy, but we need to have risk management in place, because to overcome the losers, we don't want to be losing too much, guys. We want to be losing just what we can afford. So basically, you can try this on demo accounts, or you can even do it on TradingView as well. And I would highly suggest you guys to just practice and learn, because that's the best way possible. Guys, please like this video, please subscribe to my channel, and go back to the videos like the moving average and everything else for like the reversal patterns and so on and so forth. There's loads of videos on my YouTube channel, guys, so I would suggest you guys to go through a couple of them, and hopefully you will see from my side that the way I look at market, and hopefully you will see a massive difference in your trading, guys. So once again, thank you so much for watching, and I'll see you in the next one, guys.